For the Atlas line, Jim, let me show you here. I know you're asking about it. Here is the Atlas line right here. The Atlas line, you don't have to do anything special, just whatever time zone you're in, whether you're Pacific, Central, Mountain, that's what you add. Or if you want to trade overnight, you can as well for after hours for the London session. So this is the first I'm looking at this. It's short 43.64.75. Right as the market opens, I would have to say that it's a little volatile for my preference, and I would recommend you be very careful if you trade. Even though I see the signals are good and they are successful, let me see on a 1 minute chart what that would look like. Very similar. So now the ATR is below 5 points. I think it's a better situation to be in, but I don't think that right at the beginning of the day that if the ATR is above 5, it's the way to go. So Atlas line short 43.62 was a signal. These are strength trades and these are pullback trades, and the strength and pullback trade is indicating that we are first below the Atlas line, so we're only focusing on short signals, only selling, only short signals. So that's first thing. The second thing is that if we have the market continuing lower and lower, if there's a pattern, it's actually a pattern and also a price combination for strength and pullback, because every pullback trade is compared to the previous one, indicating are we going lower, and every strength trade is compared to a previous strength trade, indicating are we going lower. So I want to see if the health of this trend is still on par before the strength and the pullback trades fire off. And what we have here is some opportunities, but again, with the ATR being this high, I caution everybody to be careful. Obviously, the risk is could be pretty large. So strength and pullback trades on the Atlas line. If you wanted to look at the trade scalper in conjunction with the Atlas line, which a lot of traders do, they say, well, I'm going to filter out trades. If I added back the trade scalper, you would only be looking at short trades. And that's okay to do. I mean, there's nothing wrong with having more than one method in your favor, telling you go long or go short. I like that personally. So let's take a look. So this short signal, good to go. Any future short signals on the trade scalper are good to go. We're below the Atlas line. And then let's say during the day, the market completely reverses. We have some great news that happens, whatever that may be. It crosses the Atlas line and goes and goes and goes and goes. And then you'll see long signals. And the long signals are based on it crossing. Here's again the price action part of this. 2 consecutive candles closing above the Atlas line. And that will give you a signal, and then you can begin to take long trades, whether it be scalping or other type of trades long. You're going to be focusing on that. So this is what we have currently. If you want to take a look at what happened the previous business day or working day, Friday, let's take a look. Okay, so this is Friday, and on Friday we start off again with a short. Here is the first short signal, which is the trade scalper. This is the Atlas line. Lots of S's and P's, which means strength, pullback. So you can go short this entire way. Then we have a double wick short on the trade scalper. So again, the idea of what you're seeing here, we're below the Atlas line first. That means that I'm going to focus more so on short selling, short trades, but not just taking anything. Wait until a signal occurs. Wait until we have some type of pattern that tells us to go short, some type of opportunity, strength, or pullback, or the trade scalper signals. And if you see a long trade, let me see, like this one here, skip it. You don't have to take it. You can use your own filter. You don't necessarily need it. We're just focusing on short signals, you see. So again, you see this long trade failed. This long trade probably made a little something, but we are below the Atlas line, so we're really going to focus on the short selling. Questions, anyone? Sure, you want to see the NASDAQ? Yep. no problem. Let's take a look at the NASDAQ. So here we have the NASDAQ for today. I had the E-mini up. Here is the NASDAQ. NASDAQ's a good market. Again, just be careful if it's too volatile. Understand the implications under those conditions, right? And the same thing, if the market's too slow, typically it's just chopping around and nothing happens. So we got to stay within that sweet spot as a trader. So the first trade of the day was the Atlas line short, and then we have some strength here, strength trades to tell us additionally to go short, and then we have only one so far, trade scalper signal to go short at this, and this was successful. Then we have the pullback, looking good so far, pullback trade, 17 points on the NASDAQ, not too bad. So this is the NASDAQ, looking better than the E-mini S&P. So it's pretty straightforward. Follow the signals, know the risk, look at the ATR, understand the target. Is the stop too big? Don't take it. Wait until it slows down. If you're trading a 5-minute chart, go to a 1-minute chart. You know, it doesn't have to be complicated. I don't think trading needs to be complicated. I think you just need to have a bigger picture before you jump in on what's happening. If you have the Atlas line, filter out trades. If you're just using the trade scalper, a couple trades a day is all you need. If you have both, use them both together and filter out signals. Excellent. Excellent. Okay, good. All right, some people made a little money on the NASDAQ this morning, those of you who have the trade scalper, and on the E-mini. Okay, sounds good. Okay, so we have a signal here, a live signal to go short on the NASDAQ. So you jump in short within a tick or two of this price. You look at the ATR, 13 points is my expectation that the market's going to go. So if you even wanted 10, that's 17, but if you even wanted just 10, this is not unreasonable to think that the market's going to make that move. All right, so the key is look at the ATR, have an expectation of what the distance it can make. If it's too much, the risk is too much, right? Because we have to have equally or a little bit more this value as a stop. If it's too much, you don't take the trade, you skip it. Okay, so let's talk a little bit about stops and protection, because I don't want to just focus on winners and focus on that aspect of it. We do have to prepare ourselves for what ifs. So I like to tell everybody that if the trade does go against you, don't have just a hard stop, right? Have a stop that is not just based on price, but based on time, or based on a pivot, or based on something that will get you out earlier. So we do have a couple of stops. So we have a prove it stop, we have time-based stop, we have a catastrophic stop. And so really it's intended to say is that if at any point in time any of these exits or exit strategies get hit, get out of the trade. So I don't want anyone to just have a stop that says, okay, I'm entering into this trade, I'm going to use this value times 2, or this value or a little bit more than this value as my catastrophic stop, and that's it. Have a combination of whatever happens first. So we can have a time-based stop. Time-based stop basically says if you're in a trade for 4 or 5 or 6 candles and the market's not really going in your favor, it's a break even, a small loss, small win, get out of the trade. So use time in your favor. Most of the trades that work, I've noticed that they always happen immediately. Trades that usually fail, they either go against you immediately or they flounder around and whipsaw and they don't do anything. We want to avoid that situation. So the time-based stop is intended to say if I don't have an instant goal or profit targeted, or at least it's going in my profit target almost instantly, get out of the trade, look for something else or the next trade. Now when it comes to a prove it stop is based off of proof. It could be based off of a pivot. It could be based off a lot of different things. So this is a little different because I use the prove it stop with the blueprint, or I use the prove it stop as proof the market's not going in my favor. So it's a little different for every method, but it's based on the same concept. It's based off of proof. So if you see a situation where this didn't go down in your favor, right? Let's just say the market started to go up. And once it started to go up, the closest pivot, let's just say, or proof, is this up here, right? So the market kind of went stabilized here and then continued lower. So if you say to yourself, I'm not risking more than a few ticks above the previous pivot, that's another alternative way to get out of the trade. Obviously, I wouldn't use all the way back here. It's too far away. But if it's a smaller loss, then use it. You don't have to always use just one hard stop based off of price. Use a combination, whichever happens first. So prove it stop, pivotal stop, time-based stop, and the catastrophic stop is something that I encourage everyone to have, because if it just goes all wrong, you enter, just goes straight against you, you got to have something to protect you. Let's say some news occurs and the market just goes crazy to the upside. You have to have something there as a catastrophe to protect you. But typically, you're not going to get the catastrophic stop hit. What usually happens is a prove it stop or a time-based stop. The market doesn't go in your favor enough to take a profit, and then you get timed out of the trade. And it could still be a break-even trade or a small win, but we don't want to hold on to trades like that. We want to say cut them loose, look for something better. If you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com, join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.